Hi guys, it's Stock Curry, and we had another volatile day in the market on Tuesday with the stock market moving up and down over 2% intraday. But if you thought that was crazy, just wait until you see what's coming up on Wednesday. I'm going to tell you everything you need to know to get prepared, so let's get into it. Here's why the stock market was so volatile on Tuesday. Before the markets opened, we got news that the U.S. trade deficit hit a record in 2022. Even though that news is bad and points to an upcoming recession, the market reaction was fairly muted, and for most of the morning, the market remained fairly flat. Really, the market was just waiting for Jerome Powell to speak, and they were waiting to see what he was going to say. Fed Chair Jerome Powell said inflation is starting to ease, but interest rates are still likely to rise. Right off the bat, in the beginning of his speech, he used the word disinflation and said disinflation has begun. This was exactly what the markets wanted to hear, and as soon as he said the word disinflation, the Nasdaq rose over 2% in a matter of minutes. Despite the massive move upward, the market then flipped back to negative after Jerome Powell cautioned about stronger than expected economic data. He said that if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more than is currently priced in. When questioned about the jobs report, Jerome Powell further said that the hiring surge shows why inflation fight could be difficult. Jerome Powell was explaining why jobs have to come down and the unemployment rate has to rise in order for inflation to go down, because so long as the job market remains extremely strong, there's going to be a lot of people with money who can go out and spend, and that causes inflation to rise up. And Jerome Powell is concerned that even though we have had a good 4 or 5 months of inflation going down, that if the labor market remains strong, that things could turn around and inflation could come back. And that's why Jerome Powell was saying that they might have to raise rates higher than expected. And that is when the market gave up that massive gain and sold off and turned negative. Now, after Jerome Powell was done speaking, the market flipped once again after we got another Fed member speaking. Fed's Neil Kashkari said that the central bank has not made enough progress on lowering inflation, and he is keeping his relatively high rate outlook. He indicated that the Fed funds rate would need to rise to 5.4%, which puts him in the more hawkish area compared to his fellow policymakers. He thinks we need to raise rates aggressively in order to put a ceiling on inflation and then pause and let monetary policy work its way through the economy. Despite his hawkish statements, the market rebounded back near the highs of the day, with the Nasdaq up almost 2%, the S&P up over 1%, and both the Dow and the Russell 2000 both up about 0.75%. As I explained in an earlier video, right now, the fundamentals just don't matter. It doesn't matter how hawkish the Fed is. It doesn't matter how bad the earnings are. It doesn't matter how bad the fundamentals are and how much everything indicates that we're about to get a recession. The market just wants to go up, and people keep buying and buying and buying, no matter how much bad news comes out. This puts the fear and greed index well into the extreme greed category. This is a problem for the markets in the future. As Warren Buffett says, be fearful when others are greedy. And I guess you could say that you could be extremely fearful when others are extremely greedy. Don't forget that companies continue to lay off workers, which is bad for the economy. Zoom announced they were laying off 15% of their workforce, or about 1,300 employees. The stock responded by rising almost 10% on the day. Don't forget that as companies lay off employees, this is usually good for their bottom line because it lowers their costs. The only question, of course, is whether those lower costs are going to be greater than the decrease in revenue that ultimately caused the layoffs in the first place. Very often, we will see companies rise as they announce layoffs and then sell off once we get closer to earnings. We'll have to see how it works with Zoom. But so far, even as many companies have missed earnings and provided bad forward guidance, their stocks continue to rise, with the market indices all on track for a 6th week in a row of solid green wins. The NASDAQ now well on track for its sixth green week in a row. And it doesn't look like the market is going to sell off or slow down anytime soon. The market is in an extreme greed situation right now. And whether you can chalk that up to retail buyers FOMOing into stocks or short sellers getting out of positions, the fact of the matter is the market just keeps going up no matter how bad the news is. Now, tomorrow, we do expect another extremely volatile day in the market, so let's take a look at what's going to move the markets on Wednesday. Here's what will move the markets on Wednesday. Chipotle reported earnings after the bell, and they missed expectations on both earnings and revenue. This is only their second miss in the past 5 years. Chipotle reported $8.29 earnings per share versus $8.90 expected. Revenue came in at $2.18 billion versus $2.23 billion expected. This is the first time since 2017 that Chipotle has fallen short of Wall Street's expectations. Chipotle was down over 4% as of the recording of this video. Now, so far, these earnings have generally been ignored by the market, and the market has continued to rise despite all of the bad earnings. But maybe, just maybe, the market will respond to some Fed speakers on Wednesday. Then again, maybe they'll ignore what the Fed is saying like they did today and last Wednesday during the Fed meeting. We'll have to see. Either way, I do expect the markets to be volatile on Wednesday, even though I'm really not sure whether they'll be green or red. Let's take a look at the Fed members who are speaking on Wednesday, because we have a lot of them. Keep in mind, all of these times are Eastern time, kicking things off at 9:15 a.m., about 15 minutes before the market opens. We got New York Fed President John Williams speaking. Then at 9:30 a.m., right as the market opens, we've got Fed Governor Lisa Cook speaking. Then at 10 a.m., we got wholesale inventories, just a revision from December. Don't expect much market movement from that. But also at 10 a.m., we have Fed Vice Chair Michael Barr and Atlanta Fed President Raphael Bostic speaking. Then at 12:30, a little after lunchtime, we have the Minneapolis Fed President Neil Kashkari speaking. Finally kicking things off at 1:45 p.m., about 2 hours before the market closes, we've got Fed Governor Christopher Waller speaking. So we have a lot of Fed members speaking on Wednesday. We can expect some significant intraday market volatility due to all of these Fed speakers, but trying to determine whether the market will go up or down is completely impossible at this point. We know that the market sentiment remains quite bullish, so if I was going to guess, and this is just a guess, I'd put it at about a 60 to 70% chance of the market going up, just based upon the current market sentiment. The technicals remain extremely bullish for the week, and on the daily candles, the technicals have now fallen out of an overbought territory, indicating that we could continue to rise higher. I did take a look at a lot of the tech stocks that had risen on Tuesday, and based upon their daily charts, none of them are anywhere close to any sort of resistance at this time. So I do see a case where the stock market could continue to rise another 5 to 7% from here over the next 2 to 3 weeks. I hope this video helped you out and you guys got a lot out of it. If you want a full update on what to expect for the market every Monday morning before the market opens, you can get my free newsletter. That free newsletter is available at stockcurry.vip/newsletter. That's stockcurry.vip/newsletter. If you got a lot out of this video, then be a good friend and share this video with your friends and family. And don't forget to hit that like button and subscribe. And if you missed the market preparation for this week, the video that I posted Sunday night, make sure you go watch it here because it has a lot of information we didn't have time to cover.